The United States of America is technically insolvent. The nation is currently carrying a debt load of $37 trillion. To put that catastrophic number into perspective, that is more debt than any empire, kingdom, or nation has ever accumulated in the entire history of human civilization. It is a sum so large that if you stacked 37 trillion $1 bills, the pile would reach the moon and back not once, but over 4 times. And here is the brutal truth that the mainstream media is too terrified to tell you. The government has absolutely no intention of paying this money back. They can't. It is mathematically impossible. But they have a plan not to pay the debt, but to erase it. They are preparing to execute the most sophisticated financial maneuver in modern history. It isn't going to be a default, where the world stops trusting America. It won't be through austerity, where they cut your benefits. And it won't even be through raising your taxes, because even if they taxed every American at 100%, it wouldn't be enough. Instead, they have chosen the path of least resistance, the path of the thief in the night. They have chosen devaluation. You are witnessing the early stages of a strategic, calculated, and invisible theft of your purchasing power. And the weapons they are using for this heist are the very assets you thought were your escape hatch: crypto and gold. Right now, behind closed doors, the machinery of the state is building a parallel financial system. They are quietly accumulating strategic reserves of Bitcoin and gold, not to save the dollar, but to revalue it into oblivion. They are preparing to manipulate the price of these assets to multiples of their current value, creating trillions of dollars on their balance sheet out of thin air to balance books that are hopelessly broken. But here is the part that should keep you awake at night. When they revalue gold and Bitcoin upward to save themselves, they are simultaneously driving the value of the dollar in your pocket downward into the dirt. Every single dollar you have saved, every bond in your portfolio, every promise of a comfortable retirement is about to be vaporized in real terms. You are about to be robbed, legally, quietly, completely. And the terrifying part is that most people won't even realize the crime has been committed until they try to buy a loaf of bread and realize their money is worthless. In this broadcast, I am going to tear down the curtain and show you the exact mechanics of this operation. This is not a theory. This is not speculation. This is a mathematical certainty based on historical precedent and current executive actions. I will show you the undeniable proof that this has happened before. I will walk you through the executive orders being signed right now that pave the way for a strategic Bitcoin reserve. I will show you exactly how the revaluation mechanism works, the timeline for when this trap snaps shut, and most importantly, the specific steps you must take immediately to position yourself on the winning side of the greatest wealth transfer in history. Because, make no mistake, this reset isn't coming in a decade. The pieces are moving on the chessboard right now. If you value truth over comforting lies, and if you want to understand the economic storm that is about to make landfall, make sure you destroy that like button and subscribe to the channel right now. Turn on notifications, because the algorithm tries to bury this kind of information, and you cannot afford to miss a single update as we track this collapse in real time. Do it now, because time is the one asset you cannot buy back. Now, let's begin with the fundamental reality that most citizens fail to grasp. Government debt is a completely different beast than your household debt. When you or I owe money, we have to produce real value, labor, goods, services to pay it back. We are bound by the laws of economics. But the state has a superpower. They control the currency. And because they control the currency, they control the rules of the game. They possess the power to change the definitions of value overnight. They can rewrite the balance sheet. They can make trillions in liabilities vanish without ever actually paying a cent. This is known as a monetary reset. And if you think this sounds impossible, let me take you back to 1933 to show you the blueprint they are following right now. The year was 1933. The Great Depression had brought America to its knees. The country was drowning in debt accumulated from the First World War and the subsequent economic collapse. The debt-to-GDP ratio was skyrocketing towards 40%. Deflation was crushing the economy, and the banking system was on the verge of total failure. President Franklin Delano Roosevelt faced a choice: default on the nation's obligations and destroy America's credit, or find a way to cheat the system. He chose to cheat. At that time, the price of gold was fixed by law at $20.67 per ounce. It had been that price for over half a century. The dollar was literally defined as a specific weight of gold. It was a promise, a contract, but the government was broke and they couldn't honor that contract. So, Roosevelt did something radical. He didn't ask for permission. He issued Executive Order 6102. Overnight, he made it a criminal offense for any American citizen to own monetary gold. He ordered every man, woman, and child to turn in their gold coins, their bullion, and their certificates to the Federal Reserve. In exchange, he paid them the official rate, $20.67 in paper money. Under threat of imprisonment and massive fines, the American people complied. They handed over their real wealth in exchange for paper promises. And then, the trap snapped shut. Once the government had confiscated the nation's gold supply, Roosevelt did the unthinkable. In 1934, with the stroke of a pen, he revalued gold. He raised the official price from $20.67 to $35 an ounce. That was a 69% increase in value, overnight. Think about the mechanics of what happened. The government confiscated the gold at the low price and then instantly repriced it to a high price. Before the revaluation, the U.S. gold reserves were worth roughly $4 billion. After the revaluation, those same physical bars were suddenly worth nearly $7 billion. Roosevelt created nearly $3 billion of profit for the Treasury out of thin air, simply by changing a number. But the real magic trick was what this did to the debt. The government's debt was denominated in dollars. By revaluing gold upward, they effectively devalued the dollar downward. They watered down the currency. Before this maneuver, the debt burden was crushing. After the revaluation and the inflation that followed, the real value of the debt collapsed. Within 5 years, the debt-to-GDP ratio fell significantly. They erased 15 percentage points of the national debt burden, not by paying it off, but by stealing the purchasing power from every person holding U.S. dollars. The American citizens who obeyed the law and turned in their gold at $20 were the victims. They watched as the government profited from their wealth. They were left holding paper dollars that had lost 40% of their value relative to gold. This was a wealth transfer of epic proportions, from the private savings of the people to the public ledger of the state. This is not just a history lesson, this is the playbook. This is the exact pattern they are setting up to repeat. Only this time the stakes are exponentially higher. Today, the debt is not billions. It is 37 trillion. The debt to GDP ratio is not 40%. It is 132%. The situation today is far more desperate than it was in 1933. The interest on our national debt is now $1.2 trillion a year. Let that sink in. We spend more on interest payments to bondholders than we spend on our entire national defense. We spend more on interest than we do on Medicare. If interest rates remain anywhere near current levels, by 2027, interest payments alone will consume nearly $2 trillion annually. That is 6% of our entire GDP, just to service the debt, without paying down a single penny of the principal. This is the definition of a debt spiral. It is terminal. Everyone in Washington knows it, the Congressional Budget Office knows it, the Federal Reserve knows it, they have run the simulations. They know there is no way out through taxation. You cannot tax a nation into prosperity when the debt is growing faster than the economy. You cannot cut spending enough when entitlements and interest consume almost the entire budget. There is only one door left open. The same door Roosevelt walked through in 1933. Devaluation. They must destroy the value of the dollar to make the debt manageable. But in the digital age, they can't just print money and drop it from helicopters that causes hyperinflation too quickly and leads to social unrest. They need a cover story. They need a mechanism that looks sophisticated, modern, and strategic. They need assets that they can revalue to balance the books. Gold is still the king of the old world, but for the new world, they have found a new asset class. An asset that is digital, scarce, and capable of absorbing trillions of dollars of liquidity. Enter Bitcoin. On January 23rd, 2025, a document was signed that fundamentally altered the financial destiny of every person watching this video. President Trump signed an executive order establishing a strategic Bitcoin reserve. To the uninitiated, to the casual observer watching the evening news, this looked like a nod to Silicon Valley. The official narrative was sleek and patriotic. We must position America as the global leader in digital assets. They told you it was about innovation. They told you it was to ensure the United States doesn't fall behind China in the technology race. They told you it was about protecting American jobs. They lied. That narrative is nothing but smoke and mirrors designed to keep you calm while they construct the trap. The strategic Bitcoin reserve has absolutely nothing to do with technology and everything to do with solvency. It is not an investment portfolio. It is a desperate life raft for a drowning currency. Here is the reality of the situation. The United States government is already one of the largest holders of Bitcoin on the planet. They didn't buy it on Coinbase like you or me. They took it. Over the last decade, through the Department of Justice and the FBI, they have seized approximately 210,000 Bitcoin from criminal enterprises, from the Silk Road seizures to the Bitfinex hack recovery. At a market price of $100,000 per coin, That stockpile sits at roughly $21 billion. In the grand scheme of a $37 trillion debt, $21 billion is a rounding error. It barely covers interest payments for a week. That is why the executive order isn't just about holding what they have. It is a directive to acquire more. Much more. This is where Senator Cynthia Lummis's Bitcoin Act enters the picture as the legislative framework for this heist. The proposed target is explicit: the acquisition of 1 million Bitcoin over 5 years. That is nearly 5% of the total supply that will ever exist. At current market rates, buying that much Bitcoin would cost over $100 billion. But here is the secret strategy they are deploying. They aren't going to just buy it on the open market. If the US government started market buying billions of dollars of Bitcoin tomorrow, the price would verticalize instantly, making it too expensive to accumulate. Instead, they are executing a ghost accumulation strategy. They are expanding the definition of civil asset forfeiture. They are accepting Bitcoin as payment for massive fines and penalties from crypto exchanges and tech giants. They are potentially utilizing government-owned energy infrastructure to mine it at an industrial scale off the books. They are vacuuming up supply in the shadows. Why? Because the goal isn't to buy Bitcoin at high prices. The goal is to corner the market before the Great Revaluation. Let me explain the mathematics of this theft, because it is the most important concept you will learn today. Let's assume the US Treasury successfully accumulates 1 million Bitcoin over the next 3 years at an average acquisition cost of $120,000. That's a total cost of $120 billion. To you and me, the value of an asset is what someone else is willing to pay for it. But for the government, specifically for the Federal Reserve and the Treasury, value can be an accounting fiction. Just like Roosevelt did in 1934 with gold, they are preparing to arbitrarily reprice Bitcoin for their balance sheet. Imagine the year is 2027. The accumulation phase is complete. The government announces that the strategic Bitcoin reserve is fully operational. And then, they drop the hammer. They declare that for the purpose of backing the United States dollar and stabilizing the national debt, Bitcoin will be valued on the Federal Ledger not at the market price of $100,000, but at a strategic reserve price of $1 million per coin. Do the math. 1 million coins, $1 million each. Suddenly, that asset class on the government's books jumps from $120 billion to $1 trillion. They have just created $880 billion of equity out of thin air. They didn't produce a single product. They didn't offer a single service. They simply changed the number in the spreadsheet. But it goes deeper than simple accounting. Because the United States is the global hegemon, when the Treasury sets a price floor, the market obeys. If the US government says, we value this at $1 million and we will defend that price, the market reprices to match the new reality. Bitcoin creates a gravity well. It might not hit $1 million overnight on the public exchanges, but it will rocket to 300,000, 500,000, 800,000. This sounds fantastic for crypto holders, right? If you hold Bitcoin, you become rich. But there is a dark side to this equation that nobody is discussing. Economics is a zero-sum game. Value cannot be created. It can only be transferred. If Bitcoin, a digital code with no physical form, is suddenly worth $1 million, what does that say about the dollar itself? It screams that the dollar is collapsing. The upward revaluation of Bitcoin is simply the mirror image of the downward devaluation of the dollar. They are the same event viewed from two different angles. By forcefully repricing Bitcoin to stabilize their debt to GDP ratio, they are essentially admitting that the dollar has lost 90% of its value against hard assets. But Bitcoin alone isn't enough. $1 trillion in revalued Bitcoin helps, but it doesn't solve a $37 trillion problem. It's just the modern digital component of a two-pronged attack. To truly wipe out the debt, they need something bigger, something with thousands of years of history. They need the nuclear option of the financial world. They need gold. And what they are planning to do with gold makes the Bitcoin strategy look like child's play. The US government is sitting on a gold mine, literally, and they are valuing it at a price so ridiculously low it would make you laugh if it wasn't so terrifying. While Bitcoin is the shield, gold is the sword. And the United States government is holding the sharpest sword in the world, hidden behind a veil of accounting fraud so transparent it is almost insulting. Officially, the United States holds 8,133 tons of gold. That is roughly 261 million ounces, stored in the vaults of Fort Knox, West Point, and the Federal Reserve Bank of New York. At today's market price of around $2,800 an ounce, that hoard is worth roughly $731 billion. That sounds like a lot of money, until you remember the debt is $37 trillion. $700 billion doesn't even pay the interest for 8 months. But here is the secret that unlocks everything. The U.S. government does not value its gold at $2,800. If you look at the official books of the Treasury right now, they are valuing that gold at a statutory price set back in 1973, $42.22 per ounce. Let that sink in. They are holding an asset that the free market says is worth nearly $3,000, and they are marking it on their books for the price of a cheap dinner. On paper, the entire U.S. gold reserve is listed as being worth only $11 billion. Why would they do this? Why maintain such a ridiculous, artificial undervaluation for 50 years? It isn't incompetence. It is optionality. By keeping the official price artificially low, they have created massive room for a revaluation event. They are essentially holding a coiled spring that they can release whenever the debt burden becomes fatal. Here is exactly how the gold revaluation mechanism executes in 2027. Faced with a debt crisis that threatens to shut down the government and crash the bond market, the Treasury Secretary will announce a restoration of sound money. They will declare that to stabilize the dollar and restore global confidence, the US dollar will once again be partially backed by gold. But to make the math work, they can't use the current price. There isn't enough gold to back $37 trillion, or even the M2 money supply, at $3,000 an ounce. So, they change the math. They announce that for the purpose of strategic reserves and currency backing, the statutory price of gold is being reset to $20,000 per ounce. This is the nuclear option of finance. Overnight, the book value of the U.S. gold reserves explodes from a paltry $11 billion to over $5.2 trillion. Just like that, they have conjured over $5 trillion of equity onto the national balance sheet. Now, combine this with the Bitcoin strategy we just discussed. $1 trillion in revalued Bitcoin, $5.2 trillion in revalued gold. That is a combined injection of $6.2 trillion in assets to offset the liabilities. It technically balances the books. It makes the debt to GDP ratio look healthy again. It stops the bond vigilantes from dumping U.S. treasuries. The government looks solvent. The crisis appears to be averted. But you know better. You know that there is no such thing as a free lunch. When the largest holder of gold in the world, the United States, sets the price at $20,000, the rest of the world follows. The spot price of gold on the open market might not teleport to $20,000 instantly, but it will go parabolic. $5,000, $8,000, $12,000. It will chase the official price because the dollar has just been fundamentally redefined. And this is where the international dimension makes this scenario inevitable. The United States isn't the only one preparing for this. Look at the BRICS nations Brazil, Russia, India, China, South Africa. For years, they have been openly discussing a currency backed by gold to challenge the dollar. They are sick of importing American inflation. They want out. China officially reports holding around 2,300 tons of gold, but analysts estimate their real holdings are double or triple that, hidden in state-owned agencies. Russia has aggressively stockpiled gold while dumping dollars. India's central bank is buying record amounts. Why? Because they know the reset is coming. They know the dollar's dominance is mathematically ending. When the U.S. revalues gold to $20,000 to save itself, it triggers a global repricing. China's gold reserves skyrocket in value. Russia's reserves skyrocket. Everyone's debt gets devalued simultaneously. It is an implicit, uncoordinated global reset. Every major government gets to wipe out their debt mistakes by devaluing their currencies against hard assets. The governments win, the central banks win, but who loses? The dollar holder loses. Because if it now takes $20,000 to buy 1 ounce of gold, whereas yesterday it took $2,800, your dollar has just lost 85% of its purchasing power relative to real money. You won't see gold revaluation on your grocery receipt. What you will see is a gallon of milk costing $15. You will see gas at $10 a gallon. You will see rent doubling. The price of everything you need to survive will explode upwards to reflect the new, debased reality of the currency. The government erases $37 trillion in debt by ensuring that your $37,000 in the bank can only buy $10,000 worth of goods. They transfer the debt from their ledger to your kitchen table. They steal your labor, your time, and your savings to pay for their spending. And they do it while telling you they are saving the economy. This is not a hypothetical scenario for the distant future. The timeline for this operation is already ticking. The accumulation phase is happening right now in 2025. The crisis phase is set for 2026. And the execution, the trap snapping shut, is targeted for 2027. We are standing on the precipice of the greatest wealth transfer in human history. The winners and losers are being decided right now based on who understands this pattern and who remains asleep. If you are holding paper, you are the victim. If you are holding the assets they are accumulating, You are the beneficiary. So, what does this timeline look like month by month? How fast does it happen? And critically, what are the specific, step-by-step actions you need to take this week to ensure you and your family are not wiped out? Let me map out the next 24 months for you. This is not a prediction. This is the schedule based on the logistical requirements of moving trillions of dollars without crashing the system prematurely. Phase 1 is happening right now. The shadow accumulation, 2025. Throughout this year, you will see headlines about regulation, about protecting investors, about the dangers of crypto. Ignore them. Watch what they do, not what they say. Behind the scenes, the Department of Justice will accelerate seizures. The Treasury will quietly establish custodial wallets. They are vacuuming up supply while keeping the price suppressed to get in cheap. This is the calm before the storm. This is your window of opportunity. It is closing fast. Phase 2, the manufactured crisis, 2026. History shows that the public will only accept radical change when they are terrified. In 2026, expect a crisis. It will likely manifest as a sovereign debt scare. The bond market will revolt. Yields on the 10-year Treasury will spike dangerously high. The media will scream about a government shutdown, a default, a total financial meltdown. They need this panic. The panic is the justification. It allows them to say, we have no choice but to take extraordinary measures to save the nation. Phase 3, the Great Revaluation, 2027. This is the execution phase. The trap snaps shut. The President or the Treasury Secretary will take to the podium. They will announce the activation of the Strategic Bitcoin Reserve and the Gold Revaluation Initiative. They will sell it as a victory for American strength. They will tell you they have stabilized the debt. And technically, they will be right. But the moment those words leave their lips, the dollar in your bank account begins its death spiral. In the aftermath, inflation will not be the polite 3 or 4% they talk about on CNBC. It will be 20, 30, perhaps 50% in the first year. We are talking about a vertical repricing of reality. So, who survives this? The winners and losers in this scenario are strictly defined by one variable, ownership. The winners. The government. They wipe out $25 trillion of real debt obligations without defaulting. They keep the lights on and the military funded. The asset holders. If you hold Bitcoin, gold, productive real estate, or equities in companies with pricing power, you win. Your net worth in nominal dollars will skyrocket. You will preserve your purchasing power. The borrowers, with fixed debt. If you have a 30-year fixed-rate mortgage at 3%, you win. The inflation pays off your debt for you. You are paying back the bank with money that is worthless and worthless every month. The losers. The savers. If you did what you were told, worked hard, saved cash in the bank, put money in bonds, you are the primary victim. Your life energy is stored in a vessel that has a hole in the bottom. The pensioners. Pension funds are legally required to hold massive amounts of government bonds. When those bonds get devalued, the solvency of the pension system collapses. The checks might keep coming, but they won't buy enough food to live on. The wage earners? Wages always lag behind inflation. Prices go up the elevator, wages take the stairs. Your standard of living will collapse faster than you can ask for a raise. This is a zero-sum game. The government's solvency is purchased directly with your insolvency. They are not creating wealth, they are transferring it from you to them. So, what do? You do not have time to be angry. You only have time to prepare. You need to execute a personal solvency plan immediately. Here is the blueprint. Step 1. Evacuate the dollar. This week, not next month, evaluate your exposure to paper assets. If you are holding long-term government bonds, get out. They are certificates of confiscation. If you are holding excess cash beyond a 3-month emergency fund, move it. Sitting in cash is not safe. It is guaranteed loss. Step 2. Secure your position in hard money. You need an allocation to the assets the government is accumulating. Gold. Buy physical gold, coins or bars that you can hold in your hand. This is your insurance against total systemic failure. Aim for 10 to 20% of your liquid net worth. Bitcoin. This is your asymmetric bet on the revaluation event. The US government is targeting a price of $1 million per coin to solve their math problem. Front-run them. Buy it before they reprice it. Secure it in your own custody. Do not leave it on exchanges. Step 3. Weaponize debt. If you have high-interest consumer debt, credit cards, kill it immediately. That interest rate will float up with inflation and crush you. But if you have low interest, fixed-rate debt like a mortgage, do not pay it off early. Let the inflation eat the real value of that loan. Let the government's devaluation strategy work for you, not against you. Step 4. Diversify jurisdictions. Do not keep all your eggs in the basket that is being set on fire. If you have the means, open a bank account outside the United States. Look at jurisdictions like Singapore or Switzerland. Hold assets in currencies that are backed by fiscally responsible governments. Make it hard for a single executive order to freeze your entire life. Step 5. Build human capital. When currency fails, skills become the new currency. Can you fix things? Can you grow food? Do you have a network of people you trust? Community resilience is the ultimate hedge against chaos. Invest in your ability to produce value that does not depend on the financial system. Listen to me closely. Some of you are sitting there thinking, this isn't fair. This is theft. You are absolutely right. It is theft. It is immoral. It is a violation of the social contract. But being right won't save you. Being morally outraged while you go broke is a fool's game. The government does not care about your principles. They care about their survival. They will sacrifice your savings to save their power structure without a moment's hesitation. You have a binary choice right now. Option A. You can stay asleep. You can trust the official narrative. You can believe that the people who created this mess are going to fix it for your benefit. And you can watch as 30 years of your hard work evaporates in 30 months of inflation. Option B. You can accept reality. You can acknowledge that the game is rigged, and you can position yourself on the same side as the house. You can front-run the trade of the century. I know which choice the smart money is making. I know which choice the central banks are making. They are buying gold. They are exploring crypto. They are dumping bonds. They are showing you the way. The only question is, are you brave enough to follow the pattern? We are entering the most dangerous financial period of our lifetimes. The timeline is set. The mechanism is built. The heist has already begun. The only variable left is you. If this analysis has opened your eyes to the storm that is coming, do not keep this to yourself. Share this video with the people you care about. Wake them up before their savings are wiped out. And if you want to navigate this reset with precision, if you want real-time updates as these executive orders drop and the prices start to move, make sure you are subscribed to this channel. I will be tracking every move of the Federal Reserve and the Treasury as we march toward 2027. The government has a plan for their survival. Make sure you have one for yours. Position yourself now, while there is still time. Because when the revaluation happens, the doors will close and the wealth transfer will be final. The choice is yours.